Hey everybody, hope you're doing well. Today we're going to cover the cues for the week of February 8th, 2021. It's Super Bowl, so hopefully everybody is rooting for them Kansas City Chiefs. Really hoping they're going to beat Tom Brady and the Tampa Bay Buccaneers. But if not, let's talk about the cues. If you like this content, please like and subscribe. This is Prep to Grow's recommendations and opinions based upon our AI and big data platform. So let's jump into the week. What is the net? Continuation of the bull this week. Last week, we projected it was going to be volatile in the beginning of the week, but end higher, and that's exactly what happened. A little bit of up and downs at the beginning, but ramped towards the end, up 2.2%. So as an option trader, great week. Very much like that. Reasonings for the bull this week. It's just not growing. The cues, the companies that make up the cues, they're accelerating. They're ramping up very significantly, and it's no stopping. It looks like thus far. So, a month and a half into Q1, accelerated growth. Usually, you'd start to see some signs of pullback at this point if companies were starting to get a little worried about their quarter, but have not seen that. So, looking good. Fangs are really ramping up, and we'll cover that in a second. Just some things to be made aware of this week and some pauses or some concern you should think about. 7% of the Q's holdings are announcing this week. We're in the middle of the earnings seasons, and we're up. The Q's up 43% plus in the past 12 months. The question is, how high can this continue to go? We're in the middle of earnings seasons. Nvidia is coming up. Workday and a bunch of others are coming to play in the next 2 weeks. So can it continue to ramp up and continue to drive past the 43% gain and continue to growth? Or is there going to be a pullback? I think that's a serious question people need to start thinking about. And do they need to rotate out into something else like the Jets or some other form of ETF or other stock? But it is a concern. It should be a big concern for everybody with this kind of substantial growth. It's not quite outpacing the growth though. And so if it was very significant, we would say it's going to pull back and it would be a bear. But growth is very high for the Qs. If you look at this year from last year, you can see this little growth right here, substantially higher than any time last year. So they're really accelerating into it, and it's continuing to ramp up. Analysts are seeing it. They're ramping it up as well. They had a little bit of a pullback, but mostly those were the non-FANG ones, and we'll cover that in a second. But substantial growth, not quite 43% growth year over year. But for the FANGs, certainly 43% growth. But for the non-FANGs, which make up the total of the Qs, or 35% of the holdings, the non-FANGs, not quite that growth. So is there a balance or a pullback coming? It's hard to say. But let's talk about the earnings for this week. So there's at least 12, make up about 7%. Not too many notable ones. I mean, not like an Nvidia or Google or somebody like that, but there are some interesting ones. Some continuation of the life sciences, gaming, some kind of classic ones, applied materials and Cisco. But let's jump into what it looks like and when we think they're going to come. So this is Prep to Grow's app Grow. It's our big data platform, AI platform that predicts in stock recommendations and screening. So if you're looking for cues that are announcing in the next couple of weeks, we have what we call safe screeners. So we just create a filter, and essentially it filters out everything that's not a cue and not announcing in the next 3 weeks, and gives us the list. But let's focus more on who's announcing this week. So if we go into this, there's a couple notable ones: Cisco, Applied Materials, Fiserv. So let's first look at the volatility of this. So volatility, open interest. Let's talk about Cisco. Cisco, I used to work for Cisco for a long time. Great company, grew with them. We have a decent 5-day prediction, 71%. Not so great at the 30-day, but short-term volatility, not too bad at. Cisco is based in the Bay Area, Santa Clara. Worked for them for a long time, liked them, kind of grew up there, my career at Cisco. But Cisco has always been more operationally focused and competing on operations. just like Intel, there has to be some innovation, and they're kind of showing that operational efficiencies is lagging against other innovative competitors, and so they're struggling. And their numbers show that they're struggling. In this case, we're projecting that they're going to go down by about 7% in stock price. Again, earnings is always hard to play. Where it's 50-50, it's flipping the coin essentially. One wrong word from a CFO or CEO can tank the stock or accelerate the stock. So it's very hard to predict what's going to happen. Data does not predict what CEOs and CFOs and those folks like to say. So just be aware. We are predicting a put, but who knows what they're going to say. But we do predict that they're going to go down. There are decent holdings in the Qs. They're part of the SPY. We track the FANGs. I mean, their holdings is about 7% of the FANGs. We have our own separate FANG category. But they're looking to go down. They announced on the 9th. But we're projecting that they're going to go down 7-8% within the short term. And these, for Cisco, this is the one that had the most, highest volatility at 7.23. So out of all the ones announcing this week, this one expiration at April 16th, 2021. Let's just look at this one more time. At the strike price of 48, had the most volatility. If you're going to buy these, the current price is about $260 per option contract, so just be aware. We've already bought these guys. Bought them on Friday. So let's go back to this. So the other ones is Fiserv, AMAT, Applied Materials. Know them. Have had a bunch of people that I know worked at them. Traditional company. If you're ever looking for a recession, you look at Applied Materials earning announcements. Same with Cadence. All these semiconductor capital equipment companies are really kind of the leading indicators of a recession. Now, we do project that Applied Materials is going to go back, but they are a strong company. They may be a little overinflated, and that's where we're predicting a put. But let's take a look at Fiserv. These are payment processors. If you look at PayPal crushed their earnings, had a very good earnings. Fiserv is pretty good. We don't think they're a PayPal or some of the other ones, and we are projecting they're going to pull back a little bit. They, again, just like Cisco announced on February 9th, we're projecting they're going to go back about 13%. We're much better predicting them, so we're 8 out of 10 essentially in the 30-day and a 5-day. So we're predicting they're going to pull back. They're also part of the SPY. Other notable ones that are announcing this week, we kind of talked about. Not a whole lot of volatility on them. Crafts, VeriSign, Insights, and so on and so forth. But Cisco, the most volatility. Fiserv, probably the one most notable that we're looking to have a put on. And that's, again, our recommendations for the week on these announcements. Again, earnings are very, very tricky. We don't play earnings. We always sell going into earnings. We sold Facebook last week before the earnings announcement just because it's too risky as an option holder or stockholder. Stocks, you could write it out. Options, we always sell before earnings. But let's get into the yearly forecasts. We always separate FANGs from other. FANGs make up 65% of total key holdings. So if they move, it moves. You can look at the growth rate here. Very substantial, right? Not quite 50% growth year over year, but it is near that 43% growth year over year. So when you look at that growth year over year, is it justified? I would look at these FANGs to see if their growths, our projected growth, and the analyst growth. Yeah, it looks pretty justified. Now, if you factor in the other 35%, which is why there's a pause on the all-time high for the Qs, the non-FANGs just aren't. They're pretty stable. They're maybe 15% up. So will these companies drag on the FANG Plus? Potentially, certainly not as good growth. So that's why we call that out as a caution. If you look at stock volume as well, surprising it's low, which we don't like to see. As option players, obviously like a lot of volatility, but the volume is not as high as it was last year, which is surprising. 30-day predicted stock price. I mean, it's at a growth. I mean, look at year over year, certainly projecting it's still going to grow substantially. But again, it's at a high, so word of caution. But we're still projecting it's going to grow up quite a bit. 30-day predicted long option volume, so these are greater than 30 days. For the non-FANG, a lot of call volume. For the FANGs, not a lot of call volume. More put volume than call volume, but we kind of see that universal. We saw at the beginning of January a lot of call volume. So those things, 30 days, which is going into the earnings, which is good. Non-FANG volume, always pretty high for calls, or a good mix. But long term, next 30 days out, why there's not more call volume is something to be noticed as well. 30-day predicted bear versus bull. Again, puts are going down, calls are going up. That's good. We think we're continuing to the bull this week. However, again, just to summarize, 43% growth year over year is a lot. Are we at a high? If you look at the FANGs, probably not. You look at the non-FANGs, is that going to be drag? Potentially. Predicted long-term call volume for the FANGs, I think there's more puts betting against them. I would kind of say that would not be a good idea. You should never bet against the Apples of the world, the Amazons of the world, so on and so forth. They just always seem to perform. So that's our cues for the week of February 8th. If you have any questions, always feel free to reach out to us. Happy to answer any questions. If not, have a great week of trading, and we'll talk to you next week.